Hi, this is Neil Clements, and this is The Real Deal with Neil. Today we're going to be talking about a simple 3-word real estate strategy that will allow you to expand your business, focus in, and hint, it's not that complicated, but it will make a big difference for your business. So let's get to it. So we're starting off. Let's talk about the clarifying question that we need to go through. What is the one thing that I can do that such by doing it will make everything else easier or unnecessary? So for your flipping business, whether it be land or houses, what do you think the answer is to that? Well, I've come up with the answer, and I believe it's our 3-word real estate strategy, which is buy discounted assets. And the reason that I believe that that's the one thing we can do to make everything else easier and necessary, which by the way comes from the One Thing book by Jay Papasan and Gary Keller. And it's essentially the reason that we talk about buying discounted assets is because we don't want to gamble for appreciation. We don't want to gamble for cash flow. And when I say gambling, I mean essentially just hoping that appreciation is going to happen. And when we talk about appreciation, the value rising over time, we don't want to go into a real estate investment just hoping that the value will rise over time. Now, of course, there are a lot of real estate investments that we do where we hope that'll be the case, but we don't want to bank on that because what if it doesn't happen? The second thing is hoping rents will go up over time. And while rents and property values do typically rise every year, almost like clockwork, we can't count on that. I mean, imagine if you bought a property in 2007 at the very height of the market and counted on that in 2008. Well, your value wouldn't have been back to 2007 values until probably like 2012, 2013. And so the smart real estate investor of today can't gamble on real estate, especially in this cyclical market in 2025 that we're in right now. We can't bank on appreciation and we can't bank on cash flow unless we come into the deal on a discounted asset to make sure that it will happen. Because I see investors doing this all over. Especially a few years ago, I was looking at a beach house at a popular beach location in South Texas that we like to go to every year. I was looking down there and I started calling agents. There was this real nice townhouse complex that we like to go to that I was thinking, it'd be better for us to own this because, I was all about owning real estate. Let's own as much as possible because it'll cash flow and, real estate always goes up. That's what I always told myself, which is not true, by the way. And I called one of the agents down there and I just asked, these values that they're selling for, like, how are people cash flowing? And what does the analysis look like? And she told me something very interesting. She said, Neil, people buying in our area don't buy for cash flow, they buy for appreciation. And I said, okay. And then I started hearing that kind of in the DFW Metroplex too, like all these investors coming in, especially during COVID timeframe, New York, California, a lot of the places where we think about like big money coming from, started coming to our cheaper market in Texas and started buying up assets. So we're not buying for cash flow, we're buying for appreciation. And I mean, heck, during COVID timeframe, that strategy worked. However, if you bought an asset in 2022 versus right now, mid-2025, that's a pretty poor strategy. You would not be in a good financial position. And that's why a lot of our commercial real estate guys are not doing so well right now because of maturities and some other things to do with their loans where they bought on gambling. Right? They thought the real estate market always goes up, the values always go up, the rents always go up. In reality, they don't. And so buy discounted assets is the real estate strategy. And if you buy discounted assets, no matter what market condition you're in, you can always buy. And some people listening might be like, well, discounted assets don't exist anymore. The reality is that the people who say that just aren't willing to do the work. Maybe it's going to require 1,000 or 2,000 phone calls of talking to people to find a discounted asset to the tune that you need. Maybe it's going to take talking to 100 wholesalers. Maybe it's going to send 10,000 pieces of mail. Maybe it's 100,000 text messages, just arbitrary numbers here. And whenever people hear those numbers, they're like, oh, well, yeah, that's just extreme effort. But when we're talking about buying discounted assets, we're talking about life-changing values. We're talking about buying something worth 100,000 for 50,000. We're talking about buying something worth 300,000, maybe a house for 225. Like we're talking about big equity growth, 50,000, 30,000, 75,000, $100,000. Like people don't just get handed that amount of money for doing nothing. And so if you're questioning or if your mindset is like, these opportunities don't exist, well, let this video be a fact of like they do. That's the business that I run. In addition, you can find thousands of other investors, if not tens or hundreds of thousands of investors across the nation who again say otherwise, especially wholesalers. And so what we seek to do in our business is we buy discounted assets below market value, and we come in and we force appreciation through either renovating a house, subdividing land, re-entitling, rezoning land, increasing NOI on multifamily or commercial style investments. We come in and we figure out what is going to create value. We buy it below market value on the front end, so we make money on the front. And then on the back end, we also do a value add strategy and we get the double whammy. When we look at a 3-word real estate strategy of buy discounted assets, it's really simple. It's really easy to remember. It builds net worth immensely, really fast, because the way that I've done it in my business is we go out and we find discounted properties, especially for land, sometimes houses as well. We add value to them when we sell them. Well, we get that cash in, then we go out and we buy discounted assets of single family houses for rent. And so we can say make $30,000 to $100,000 on the front end on a deal. We take the profit from that deal, we put it into a rental property that we bought for $30,000 under value. So now we've created another $30,000 of value. And then over time, what we do with the cash flow that we receive from that investment is we put it back into the funnel and we start all over again. And we buy notes, we do seller financing and some other means to have some passive income. And so what does it all start from? It all starts with a simple strategy that I'm trying to tell you is buy discounted assets. And if you buy something right, you just got so many different exit strategies, right? Take a house, you can put a renter in it, you can flip it, you could seller finance it. You could, make it a multi-family potentially if it's zoned right. But it's a piece of land, you could subdivide it, you could entitle it, you could rezone it, you could build multiple houses on it. Here's my point of this whole video, is that if you can buy discounted assets consistently, then everything else would become easy or unnecessary. And that's what I'm trying to tell you. So go get it.